Good morning. Welcome to today's market intelligence brief from Top Gun Options. Well, folks, Wall Street responded to the Greek drama with just little fanfare, and we're also going to cover a potential bull put spread on the USO, the United States Oil Fund. So let's get right to it without further delay. What's going on overseas with our buddies in Greece here? Well, it seems to us at the Top Gun Options trading team as if investors really have already factored in the current round of EU noise emanating from across the Atlantic. I mean, how else to explain the fact that in spite of the news that Greece finally signed off on the latest round of bailout funds, all Wall Street could do today was shrug and nudge higher by a couple of points. Well, true, it was somewhat anticlimactic as the Eurozone finance ministers approved over 170 billion in loans that would allow Athens and the folks here in Ibiza to keep on partying and meet their latest round of debt obligations. There were few, if any, surprises in the agreement that requires Greece to comply with a new wave of austerity measures, including the promise to severely reduce its unwieldy debt to GDP ratio. Now, folks, the ratio currently sits at around 160%, and Greek leaders must somehow find a way to lower it to 120% by 2020. I mean, that's just absolute insane. But, I thought it was pretty interesting, what the AP said here. But the patchwork of measures, including the implementation of austerity measures in Greece and approval by skeptical German and Dutch parliaments required to give the rescue even a chance of success, means it's unlikely to be the end of the continent's debt crisis, folks. And with elections due to take place next month in this beleaguered Mediterranean country, the big question investors are likely to ask is this: if the country elects a new set of leaders, as is expected, will they honor the current commitments that have just been made? Sold. As evidenced by the quiet response by the latest deal, skepticism certainly remains. This can has been kicked all the way down the road, folks. And obviously, great article here on Bloomberg. Greek rescue leaves Europe default risk alive. What else happened yesterday? Well, Dow Jones Industrial Average managed to scale that psychologically important wall, at one point climbing past 13,000. It was the first time since 2008 that the level had been reached. However, without any particular reason to climb higher, the Dow kind of retreated back down at 12,965, though it did end the day up 15 points. Switching over to our Trade Monster platform, the SPX also ended the day on the upside. The SPX index, the S&P 500 index, also managed to stay above the 1,300 level for the last several sessions. And if it continues to build a level of support at that line, that 1,300 line, it could resume the strong push higher that has carried it over 100 points higher on the year to date in the past 2 months. It's pretty cool. All right, real quick though, let's take a look at the VIX. That's our volatility index. That is our altimeter, our barometer, you name it, for all of us as options traders. The VIX ended the first trading day of this holiday shortened week right there at 1819, trading in about a 10% range intraday. Now, this was reflected the uncertainty that remains even after the Greek bailout deal was completed yesterday. Now, remaining close to the bottom of its 7-month trading range, the VIX continues to provide traders and investors with a cost-effective volatility hedge. Folks, a wise trader once told me, when vol is cheap, you buy it. When it's expensive, you sell it. Taking a look at the VIX for the past year, what's it look like, folks? Huge spikes on, getting booted, losing our AAA credit rating, can't get a budget deal, EU, Greece, and then we're kind of back down in a lull here. Again, when vol is cheap, you buy it. When it's expensive, you sell it. So for anyone who may doubt it, this market remains susceptible to mood swings and just the latest news blast. In spite of whatever paper or any member of the Eurozone happens to sign, particularly regarding debt, the market remains doubtful that any proposed fix is anything but short-lived. The most liquid of the VIX derivatives is actually something called the VXX. That's the iPath S&P 500 VIX short-term futures. and they remain as a good hedging tool of choice for protecting your portfolio at a reasonable cost against another black swan or Ibiza swan, for lack of a better word, type of event. Okay, on the options front. Now, the drama continues around Iran, folks, and as a former Navy fighter pilot who flew combat missions over Iraq, I have to tell you that most of our time was not spent planning missions over Iraq. We were actually planning missions against Iran. And this was back in the mid to late 90s, folks. So this is not going to end well. Iran threatened today to maybe even preemptively attack Israel, since Israel's threatened to preemptively attack, Iran. There you go. Iran threatens preemptive action. They're like, hey, we're not going to sit here on our hands and wait to get punched in the face by Israel. Folks, it's not a matter of if, but when Israel is going to attack Iran, and that's obviously not a good thing. So how does that impact us as options traders? So the drama that continues around Iran has caused crude oil to spike above the $105 per barrel level. And of course, you're seeing it on the news with over $5 gas, and shortly, soon to follow, is the Democrats hauling evil oil company CEOs up in front of Congress for their yearly, price gouging lecture, even though these people don't know what the law of supply and demand means. But $105 a barrel, folks, that's the highest rate it's been in over 9 months. At this point, speculators are apparently betting that the commotion around the threatened embargo with Iran will result in additional price increases on the international spot market for oil. Of course, any increase in the acrimony between Iran, the EU, Israel, it's going to result in additional rise in the cost of crude, period. So let's take a look. If we look at a chart of the USO, which is the United States Oil Fund, let's take a look at maybe the 50-day, or let's just take a look at the moving average here. It should provide a reasonable, level of support for us, at least for the short term. Now, here's a potential trade that we could consider here as we look at the USO. So let's go over to our options chain here for USO. Folks, if you need a free paper trading account, that's what this is. You can go to trademonster.com/TGO, and you can open a free paper trading account. They have great tools, as you're about to see here. So I'm bullish on USO. I don't think oil is going to be going down anytime soon. So how about what we call a bull put spread? It's where we sell a higher strike put and buy a lower strike put as a hedge. So what we're looking at here at Top Gun Options is potentially the 39.34 bull put spread. I hit create a spread, vertical spread on my Trade Monster platform here. And I'm going to edit those legs since they're backwards. I'm going to sell the 39 put, one-time March, this is in my model portfolio, and I'm going to buy that 34 that we talked about, that downside put, as the protection in case oil does crash. Now, it looks like we could probably get that for about 56, 57 cents. Let's hit our create order button. And since it's after hours, obviously not going to get filled. I like this trade, so I'm going to, put in at 56 cents. You can, let's not bicker and argue over a penny here, but about 56 cents. Let's analyze this trade. Again, Trade Monster's got some great tools where we can analyze the trade. Check this out. Probability for maximum profit is 70%. That's pretty good in my book, and I spent a lot of time in Vegas. Probability for maximum loss, 1%, and the break-even point is 76%, and it's right there. So again, great tools. You can also click spectral analysis to take a look at the Greeks and how they move over time. It's a very interactive platform. Again, love the folks at Trade Monster. So looking at the USO March 39.34 bull put spread for about 56 cents. And at Top Gun Options, we have trading rules of engagement. We'd most likely put in a 25% stop loss on this trade. And as unlikely as it may be, a round of spontaneous friendship and love may break out in the world, and resulting in a dive in the cost of this black gold. I highly doubt it. But again, this video is free, and you take it for what it's worth. So that was your market intelligence brief from Top Gun Options for Wednesday. Happy hunting. Make sure you hedge.